Hey guys, it's James, and I wanted to compare NUSI versus QYLD. They both follow the NASDAQ 100 and write options on the NASDAQ 100 stocks in their portfolio, and they are very similar type of funds. However, Nationwide's option strategy might be a little different than Global X's strategy. We'll take a look at each of their fund pages, take a look at their historical prices and their dividend yield, and then we will do a back test on the portfolio visualizer to see which fund has outperformed the other in the past few years. And then we'll take a look at my fund versus fund investing calculator, where we get to determine the future value of each of the funds to see which one is going to theoretically outperform the other. So on my fund versus fund calculator, we just look at the high level. We look at the fund share price, the dividend yield, the expense ratio is calculated into the growth rate, and then we will go over the growth and contribution, play around with these numbers, and I'll show you where I got the 0.23 and the 4.69%. So let's head over to NUSI and QYLD's product websites. NUSI is owned by Nationwide. Their official name is Nationwide NASDAQ 100 Risk Managed Income ETF. The current price as of the close of February 18th was $24.58. Here's a few stats. The 12-month trailing yield, which we're going to use, is 8.5%. The expense ratio is 0.68%, and we will get the most accurate price as of today, which is February 23rd, 2022. Just a quick overview of their investment strategy. Just like QYLD, they purchase all the underlying stocks in the NASDAQ 100, and they deploy a rules-based options collar strategy, and they distribute monthly dividends are paid to the investors using a portion of the premium generated by the call option. The additional premium may be used to reinvest in the underlying portfolio of the NASDAQ 100 stocks. If we come down and see what the annualized total return is for NUSI, their current annualized return is sitting close to 9 to 10%, where the spread collar index or the benchmark is at 10.45, and all the information that I could find, this annualized return includes reinvesting the dividends. If you use this fund purely for an income fund, which is kind of the basis for this, your return is not going to be as much as we'll see on the portfolio visualizer website. Oh, and also I'd like you to see that this fund has only been around since December 2019, which is going to come up later in our calculations, developing the CAGR or the annual growth rate for the future value of the fund. Come over to QYLD's website, owned by Global X. It is their NASDAQ 100 covered call ETF, and I believe the covered call option strategy is slightly different than Nationwide's risk manage. They're calling a rules-based options collar strategy. So the strategies playing the options market is a little different, which would give us our different monthly distributions. So for QYLD, some of the important things to note here for QYLD, the inception date is 2013, 6 years older than Nationwide's fund. Their expense ratio is slightly lower than Nationwide's. Their 12-month trailing yield is about 14.67, and that included a massive 27% dividend yield back in December of 2021. But their current most recent distribution yield is sitting at around 13.31% with a monthly distribution. Something else I want you to see, the average annualized according to the month end of January 2022, they're sitting at around an 8.35 or an 8.33 compared to Nationwide's 9.8, close to a 10% averaged annualized yield. And again, all that I could find, I believe that includes reinvesting the dividends. Let's head over to Seeking Alpha and compare these two funds. I like putting these things side by side just to see the comparison of it. So if you look at the max data here, Seeking Alpha has the QYLD data all the way back to December 2018, and NUSI has the Seeking Alpha's data goes all the way back to December of 2009. So we're going to take a look at these charts when we develop our annual growth rate for our future value fund versus fund calculator. But as of right now, we're just checking the NAV price the net asset value price for NUSI, QYLD to be able to use those numbers. Taking a look at the percent yield, and it looks like the trailing 12-month yield here for Seeking Alpha is 8.78, and the yield or forward yield, which is the estimated 12 months in the future, of a 12.13%. Just coming over to the holdings tab here, just to show you that these funds are pretty much identical in their holdings. You can see the pie chart here, very similar structure between NUSI and QYLD. And if you look at the top holdings for NUSI and QYLD, they are very similar in their percent holdings for each of the different funds, where you come down to about the 6th and 7th holding, and there's a little bit of variation between Alphabet and NVIDIA, and Alphabet and NVIDIA over here as well. I also wanted to show you their current dividend yield charts, historical yield charts. And again, this is just the data that Seeking Alpha has. If you take a look at their dividend yield, and this looks like it would be a monthly payout, so you see a step every single month, all the way up to where it's about flatlined around 8%, with a little variation around 8%. And obviously, again, this is a very new fund, so I would suspect as QYLD performed right here, you see a slight jump right here. You might see a very similar type of graph here in the next few years for NUSI compared to QYLD. And taking a look at the dividend history all the way back to December of 2019, pretty consistent, about 17 to 18 cents per month. And then QYLD, about 20 cents per month, a little bit more variation back in 2019, but it's become a little bit more solid. You're getting close to about 22 cents, and then they had that large 50-cent per share payout in December of 2021, which is very good for those that were holding QYLD at the time. So let's take a look at what NUSI compared to QYLD has looked like in the past 2 years. I'm on Portfolio Visualizer, and if you click their back test portfolio, we're going to work with this right here. It can be a little overwhelming the first time you see this, but what we're going to do is start with a $10,000 initial investment. I would like to include year to date, so January, February of 2022, and your start year of 1985. Don't worry about that. It's just going to go back to the most recent fund start date. Cash flows, we're gonna just keep it with $10,000. We're gonna have no rebalancing. It doesn't matter anyway, because we're just gonna have a one fund portfolio, and then we will compare the difference between reinvesting dividends and not reinvesting dividends. Yes, we would like to display, and then we're going to forget about factor regression, and we're not going to include a benchmark. So let's go ahead and put these in here. So we have a 100% NUSI and a 100% QYLD. We will analyze the portfolio values, and the data only goes back to December 2019, because that's when NUSI was established, or that was their inception date. So we compare a $10,000 investment at the very first comparison date between these two funds. And it looks like across the entire 2-year history, your overall, with dividends reinvested, your overall $10,000 value, you would have gotten more with NUSI than you would have with Global X's QYLD. The total smoothed out was what they call it, CAGR ratio, cumulative annual growth rate for the 2 years. A little bit over 2 years, was 9.38% for NUSI and 5.77% for QYLD. Now let's go back up here and change the reinvestment of dividends, because if you recall, these funds are considered income funds. So the whole entire idea of these funds is so that you are paying yourself a dividend. Otherwise, you would just invest in funds like VTI, VOO, and possibly VYM if you wanted your portfolio to grow at the safest index value. Without reinvesting dividends, NUSI would again outperform QYLD, and your actual portfolio value for QYLD will have dropped to $8,797, where your NUSI fund will have only gained $245 worth of value in 2 years. However, you would have gotten the dividend payment. And the overall cumulative annual growth rate If you just want to look at that in the most basic form, that is drawing a straight line from this dot right here to the ending figure, and we're at a 1.17% CAGR for NUSI and a negative 6% CAGR for QYLD. So let's head over to my fund versus fund calculator. Again, this is past values. This is what you would have gotten if you would have invested in December 2019. This is going to be future value. This is guessing with at your current age at, let's say, if you were 30 in the next 1 to 10 years, what would your portfolio look like? And this includes reinvesting dividends all the way. So on the left side here, we have NUSI. The fund share price today is sitting at $24.47. The dividend yield is 8.5%. And we're going to put 12.13% for QYLD. This does not take into account that large dividend payout in December of 50 cents per share. And we're going to keep it more conservative at 12.13. These are the expense ratios. And this is the annual dividend per share. We're going to keep the monthly addition to 0. Now, these numbers right here were some CAGR numbers, or a 2-year CAGR number from February of 2020 to February of 2022. And I came out to be about 0.23 for NUSI and negative 4.69% for QYLD. So with those numbers inputted into the graph, NUSI is going to slightly outperform over a 10-year period. If you continue with the same 2-year CAGR growth, NUSI and QYLD are going to perform similar like this. The only upside to QYLD is you're going to get more dividends with a smaller portfolio. And that's where this calculation comes over here in our columns M through O. So to be able to read this box right here, our monthly dividends, if you wanted to achieve $500 in monthly dividends with NUSI, you need $70,000, and $500 a month with QYLD, you would need $49,000 at the current dividend yield ratios. And then for annual dividends, because some people like to know how much they would need to have annually. If you wanted $50,000 annually in dividends, your NUSI fund portfolio would have to be $588,000, and your QYLD portfolio would have to be close to $412,000. So if you guys enjoyed that, if there's any insight, any 2 cents you'd like to leave in the comments, go ahead. If you want access to this calculator, it's over on my Patreon. And with that, thanks for watching.